This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril in Singapore. Your top stories this hour. Fresh trade uncertainty set to hit Asian markets as President Trump says he's raising his global tariff to 15% after the U.S. Supreme Court struck down his so-called reciprocal levies. Senior U.S. officials say key trade deals remain in effect, but India and the EU step back on talks and ratification, while Japan calls the situation a real mess. The tariff turmoil handing China's Xi Jinping a boost in bargaining power for his meeting next month with President Trump in Beijing. And we'll assess the market, economic and geopolitical fallout from the latest trade turmoil with expert guests from the Hinrich Foundation, Oxford Economics, Capital.com, and the U.S.-China Business Council.
Take a look at how we're setting up across the Asia session. We are away here in Japan on holidays together with China. So we could see a little bit of thin trading today, but it will be the first time that Asian assets are reacting to the latest on U.S. tariffs. Of course, could we see a relief rally is a key question right now. I mean, the worst case trade fears have been reduced with the U.S. Supreme Court striking down President Trump's reciprocal tariffs, although he's threatened fresh new ones. You can see the Japanese yen holding very close to that 155 level against the U.S. dollar. The Aussie also 70.84 U.S. cents is your level. At this point, the ASX 200 early in the staggered open is up 0.3%. And of course, the ASX 200 very commodities heavy. So do watch out for any reaction in oil, commodities prices, as well as we continue to watch, of course, the U.S.-Iran tensions as well. China away on holidays, but we know that the yuan has stayed around the 2023 highs, strength against the U.S. dollar.
Shery, you talked about how this is the first time for Asian markets to react to the tariff uncertainty. It is also the case for U.S. assets because the 10 and then 15% that came from the U.S. president did come out after the Friday market reaction. This is what you're seeing following the Friday stock market bounce. Futures are pointing to a bit of downside. The decline you're seeing also on the Bloomberg dollar index. And this is coming in a week where we have to watch out for NVIDIA earnings, and at a time when U.S. stock markets have already been underperforming their global peers. We'll also be watching those Treasury futures because Japan is shut today, so no cash trading. Less tariff revenue. What might the impact on U.S. deficits be at a time where investors also watching out for the data that's come in the past couple of sessions? GDP in the U.S. slowing more than expected. The core PCE hotter than expected. Might this all point to a direction and an environment that's good for the dollar bears, and what this means for the spurring of metals on a time where you're looking at these declines or a slight reversal on U.S. energy prices? Shery.
The U.S. is telling partners to honor bilateral trade agreements despite fresh confusion following the Supreme Court ruling against President Trump's so-called reciprocal tariffs. Trump now saying he'll impose a 15% baseline tariff on all global trading partners. But the EU is warning it may freeze ratification of its deal, while sources say Indian officials are postponing talks to finalize its pact with the U.S.
These deals are going to be good deals. We expect to stand by them. We expect our partners to stand by them. And I haven't heard anyone yet come to me and say the deal's off. They want to see how this plays.
Let's get you the latest with our Washington Deputy Bureau Chief Laura Davison and Chief North Asia Correspondent Stephen Engel. Laura, let me start with you because, of course, it went from 10% on Friday, then 15% on Saturday, and we're still trying to figure out the ramifications of all these. These new tariffs, though, come with limitations.
Yes, Trump, the days where he could just take to Truth Social and say, I am putting an X% tariff on Y country or Z good, really those days have come to an end. Now he has this limited short-term authority to put this 15% tariff on global goods. That runs out in the summer, though. So that's why you're seeing some other countries like the EU, like India, just kind of making a bet that they can essentially wait out the time of this tariff. It's very likely that Trump will try to extend it once those 150 days are up, but that'll be subject to legal limitations. Otherwise, Trump really has to rely on national security concerns. That takes, going to the U.S. Trade Representative, putting together a report, making the case for why a certain product could pose problems to U.S. national security. That takes a long time and is also subject to legal challenges. So all of the tools that Trump had now are, much more limited in what he previously had, just 3 days ago.
Steve, let's bring you in here. We are watching for the reaction from Asian trading partners of the U.S. What are we seeing potentially also this leverage for the Chinese at the time where we're watching out for the March meeting between the U.S. and Chinese leaders?
Well, at first blush, it indicates that Xi Jinping probably has gained some leverage ahead of that summit coming up March 31st to April 2nd in Beijing between Trump and Xi Jinping. Again, these reciprocal tariffs of 15% basically have been null and void. There's still some sectoral tariffs on autos and steel that remain for some of the Asian partners like South Korea, Japan. We'll have to see how that does not play under these IEEPA tariffs. So again, the U.S. will, as Jameson Greer just mentioned, implore its trading partners to honor their trade deals. I think Beijing right now is in a wait-and-see situation. They're just coming out of the Lunar New Year holiday. The markets resume tomorrow, so there's been a prolonged absence, if you will, of policymakers in Beijing. I think they're also taking a wait-and-see approach right now. They don't want to antagonize Trump ahead of that summit or disrupt any of their deliverables that they want to have. So it's a wait-and-see, and so far state media in Beijing has been fairly muted, simply stating the fact, whereas, of course, social media in China has been applauding this ruling by the Supreme Court in the United States. But again, official media has been fairly muted so far. But it is definitely highlighted in China because of that upcoming summit in just a few weeks' time.
Yeah, we have seen some reactions from other countries, though, right?
Absolutely. So I mentioned South Korea and Japan. You mentioned at the top of the show where a senior LDP official in Japan essentially saying this, ruling by the Supreme Court and the overall tariff regime from the Trump administration really has caused a real mess. But again, they are so far, according to him, not seeking any renegotiation of any deal that they have with the United States. The crux of the negotiations last year with Japan and the United States essentially was lowering tariffs on autos, which are not covered by the Supreme Court action. South Korea, the industry minister, has held emergency talks on Saturday to assess the Supreme Court decision. The ruling essentially, as I said, voids that 15% reciprocal tariff currently applied to South Korean goods. But again, it does not necessarily apply to steel and autos. So again, we're going to have to see how that plays out. There's a lot of wait and see kind of approach to that decision by the Supreme Court on this Monday morning in Asia. India officials were going to be heading to Washington this week. They've postponed that. That deal reduced tariffs from 25 to 18% and also removed an extra 25% tariffs. So obviously the Indian officials are reassessing their negotiating tactics right now.
Also happening this week in Washington, the State of the Union. I mean, Laura, when you look at how this Supreme Court strike down is seen as a setback for Trump's tariff policy, we're waiting to see how he finesses it. He's already lashed out. How does this all affect domestic politics and, in a run-up to the midterm elections as well?
This is a Congress that is very, very wary of tariffs. Trump's best bet to do what he wants to do on tariff policy is to get Congress to sign off of it. If he has their approval, he can do a lot of things and has a lot of wide latitude to act here. However, we've seen that Congress is really quite cooling to his tariff agenda. We saw just a couple weeks ago that Republicans, at least a handful, joined with Democrats to sign a signal disapproval of his tariffs on Canada. It's highly unlikely that members of Congress going to face voters, where we know tariff policy and these higher tariffs are unpopular in an election. It's going to be all about the cost of living. Highly unlikely that they're going to want to sign off and give Trump a broad latitude to do many different things on tariffs. What we'll be watching for closely is the tone he takes when he goes into the chamber in the Capitol tomorrow. What exactly is the tone he takes? What is he asking of Congress? How angry is he? We saw him, quite angry, lashing out in the briefing room on Friday, really criticizing the Supreme Court justices who ruled against him in this. So this is an issue that could really prove to be a wedge between congressional Republicans and Trump, who really need each other going into the midterms in November.
Laura, Steve, thank you so much. Bloomberg Washington Deputy Bureau Chief Laura Davison and our Chief North Asia Correspondent Stephen Engel. Now let's get more on how markets may react to the fresh tariff uncertainty. Bloomberg and life strategist Mark Cranfield joins us from Singapore. So Mark, we're watching out for potential tariff uncertainty. I mean, given how it's gone from 10 to 15 now, despite what the Supreme Court has ruled, what is the extent of the risk in Asia?
Well, traders have to try and assess what it means for different countries, really. That's the key here. They can't really come in with some blanket idea because that's just too much of a mess, really, as the Indians or the Japanese were saying there. So it's really how do individual countries respond. So, for example, we've heard, as Laura was saying, that the Europeans are now considering delaying ratifying the trade deal that was talked about last year. So that obviously would affect assets in the Eurozone, the currency as well. We see the Euro is a little bit stronger today. So maybe the way traders are reading this overall, it's a slight negative for the US dollar, and that may apply across the board. And then they've got to dig a little bit deeper. What does it mean for European equities if Europe stands back from the deal which they've already agreed with the United States? Now we've got Japan considers the situation to be fairly messy. They may need to reassess their deal. India is also, as we heard there, they've delayed their trip to Washington. They are reassessing. So a number of deals were set up in the past 6 months or so, and now some countries are questioning whether those are still valid. And that's what traders need to look at, is the specifics of one-to-one deals with the United States. And then, of course, you've got China as well, which may be in a stronger position to negotiate. And the yuan was already a pretty strong currency going into this. This will probably add fuel to the path of the yuan. So traders will be taking it on an asset-by-asset basis to see what it means. Does it extend the position we already have, or does it change any of the narratives around that? And then around all of that uncertainty, you've got it all playing into the hands of people that already like precious metals. They've been having a good run, gold and silver, and it probably adds more fuel to people that want to use those as a hedge to the overall dynamics in the market as well.
And you haven't even touched on the potential mess that this could be for the U.S. fiscal health as well. I mean, we were supposed to see all of this revenue coming from tariffs that the Congressional Budget Office said could potentially be $3 trillion of revenue over the next 9 years. And not even to mention that the U.S. Supreme Court didn't necessarily say how these revenue already collected would be refunded, which could be 170 billion U.S. dollars. What does this mean for U.S. assets? I mean, and just the credibility of American markets?
The place where this will play out the most is in the U.S. Treasury market. So the Treasury yields have probably remained a bit subdued, partly because investors are expecting a greater source of revenue to the United States. We've already seen billions of dollars worth of tariffs come into the U.S. But if you're going to take away that source of flow of money coming in, plus the risk that they may need to reimburse people for some of these deals which are no longer going to be in place, that's a negative for the Treasury market. Yields will need to rise, especially at the longer end of the curve, where that's where people put the most premium into the value of the US compared to other countries. So we could well see a steepening of the Treasury curve. That's going to be pretty awkward because there's a lot of funding to come up in the US, particularly as we come into the end of the quarter, end of the March quarter. So all in all, the place where it will play out most significantly is there. It will have an impact on the equity market, but in the very near term, of course, people are more concerned about what Nvidia has to say this week. That's the key for global equities to some extent. If Nvidia can actually meet some of these amazing expectations which are priced into the market, equities will breathe a sigh of relief. But the Treasury curve is a big one for G10 in general. Whatever happens there will impact European and Asian interest rates as well, and of course go on to move the US dollar to some degree as well. So that's where the eyes will be, the long end of the Treasury curve.
Yeah, Nvidia, Salesforce into it as well this week. Mark Cranfield, good to have you with us, Bloomberg and Live strategist there. Coming up on the Asia Trade, more on the Trump tariff recalibration with the Hinrich Foundation, Oxford Economics, Capital.com, and the U.S.-China Business Council. Plus, ANZ will give us their commodities outlook amid reports the U.S. is considering a targeted strike against Iran. Much more ahead. This is Bloomberg.
Tomorrow, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
I think the Supreme Court just lowered the possibility of a recession by a not insubstantial percentage.
There's one thing that is relatively clear, and that is this is a tax cut. So, the tariffs are taxes.
This is near-term drama for short-term players.
Ultimately, this is a positive thing for U.S. growth.
This is opportunity for nervous investors, skeptics, and bears to take some profits.
The president and Republicans in the Congress will press every lever they can.
Bloomberg TV guests reacting to the U.S. Supreme Court ruling striking down some of President Trump's global tariffs. Joining us now is Deborah Elms. She is head of trade policy at the Hinrich Foundation, an Asian-based nonprofit that works to sustain global trade, to advance sustainable global trade. She has previously testified before the U.S. Congress on U.S.-China trade issues. Deborah, always good to have you on days like that. I mean, when we look at what's happened over the weekend and how quickly Trump has lashed out, now talking about 15%, what is the lay of the land? Are there winners and losers that are more clearly emerging from all this? What are you watching out for next?
Well, there's a number of things that are particularly interesting, but one that matters for Asia is what happens to the existing bilateral trade deals, of which we have some that are at a framework stage, some are interim agreements, and some are finished agreements, including the last one signed with Indonesia on Thursday, the day before the Supreme Court struck down the IEEPA emergency tariffs. So the question is, what happens to those deals? Are they still live? Are they as they were negotiated? Is the tariff rate that is locked into that agreement stable, or does it now drop to 15%? Or in the case of like Singapore, does it raise to 15%? Because Singapore's been sitting at 10%. So I think there's a lot of uncertainty by trade partners about what the rates are. And there's a lot of confusion about companies over what is it that my rate will be if I have goods arriving in the United States today.
But has the Supreme Court decision taken some of the leverage away from the Trump administration? And does that give Asian countries that are now going to have to perhaps recalibrate things and negotiate with the U.S., do they have a bit of an upper hand then?
I don't think so. I think what we're focused on is the argument that these other statutes, these other legal authorities, especially something called Section 232 for national security and Section 301 for unfair trade practices, take time. But I think this administration has shown a flexibility around time that means that they could announce something on a Monday and impose it on a Tuesday, first of all. And second, I think people aren't aware of what Section 301 in particular on unfair trade practices does. That allows the president a lot of legal authority to create all sorts of challenges, including changing tariffs and including changing tariffs for lots of different reasons. Once I've declared that a country is an unfair trade practice country, I can do a lot of things. And I think we have forgotten how powerful that tool actually is. And as the U.S. shifts from IEEPA, the original tariff discussion for Trump, to this new powerful 301, I think we will look back on IEEPA with a certain amount of fondness.
Which is so funny to say, right? But when we look at this, perhaps new tariff regime or approach from the Trump administration that they will have to enact in order for their trade agenda to be pushed forward, whether we're looking at legal or procedural constraints, these are still constraints. So how lasting might it be after the, say, 150-day period beyond this?
Well, after the 150 days, the current statute, that Section 122 that they're using today, that will lapse. And so they will have to adjust, which is why we are in a period of extreme turbulence, because we've moved from one regime to a temporary regime to a much more permanent regime. And especially for those Section 232s and 301s, those could be long-lasting. So those might extend long beyond Trump administration timeframes into whatever comes after that.
Yeah, the steel and aluminum tariffs are still in place, right? Deborah, why isn't the American public and the U.S. lawmakers pushing back harder? We know that these are taxes on people, that 2/3 of the American population don't want these tariffs, that if you lose the IEEPA tariffs, that would mean an average boost to real incomes of $1,200 per family this year, according to the Urban Brookings Tax Policy Center. It's not like people don't know this.
Yes, but they're not yet prepared, I guess, to, I don't know what, to protest, to ask legislators to make different decisions. It's a little unclear what the U.S. public can and should do beyond registering their disapproval in a poll. And I think until you get some way for U.S. consumers and especially U.S. companies to come out en masse to say this is not acceptable to us and we're looking for serious changes, we're going to continue to have tariffs. And you saw that while we revoked IEEPA on Friday, by today we already have 15% tariffs that are supposed to be in place. So there's no relief in the headlines, at least, for consumers or for U.S. companies who are dealing with much higher tariffs.
So is it the best strategy for U.S. trading partners to just sit still and wait for things to get a little bit more clarified at this point when it comes to the tariff levels, when it comes to who they should be negotiating with for what outcome?
Yeah, I think the trading partners are in a bind, questioning what is happening. Of course, you have to allow domestic procedures to take their effect. That's true for all governments, and they're quite familiar with that. But they do want clarity, and they want clarity as soon as possible, especially because companies need to know. I mean, there's a giant question mark today. If you had goods arriving at a U.S. port today, what is the tariff rate that you face? Completely unclear. I think it's still IEEPA tariffs because they haven't yet been phased out, despite the Supreme Court ruling, by the Customs and Border Patrol. But we don't know how long those will last. So is it IEEPA tariffs today? What about tomorrow? What about Friday? So I think there's a lot of questions that companies and governments are asking about the U.S. trade policy. And I'm not sure that the U.S. has the answers that they can deliver quickly enough to satisfy those urgent demands.
And in that same vein, what about the tariff refunds? Where are we on that?
Well, the refunds are still unclear, but I think if you've got an illegal tariff, then it was an illegally collected tariff that will have to be refunded. The U.S. is going to claim that this is going to take a long time. It will not take a long time because we know from the internal systems, right? You paid the tariff. It went to this place, this amount from this bank account. That can be refunded quite quickly, but it goes to the importer of record. And the question will be, the importer of record is not always the individual or the firm that paid the tariff. In other words, like if I ordered something from Federal Express, then FedEx paid that. FedEx isn't actually the person that paid the ultimate tariff. I did. And so then FedEx will have to give the money back to me. That is an unholy mess.
Yeah, consumers unlikely to get much of their money back. Right,
Very little,
Deborah?
yes.
Great to get your perspective on a day like that. Thank you so much for coming in, sharing your insights with us. Deborah Elms is head of trade policy at Hinrich Foundation. Now, a reminder of our new online feature, the Bloomberg Video Hub. Subscribers can explore live streaming, news and interviews, all our Bloomberg TV shows, documentaries, reporter analysis, and more. Check out bloomberg.com/videos. This is Bloomberg.
Take a look at how currency markets are faring after the Supreme Court tariff ruling, but also President Trump, of course, threatening new ones. The U.S. dollar coming off its best week since October. The euro right now strengthening a little bit, but after falling to a one-month low. Saxo market saying that with less tariff revenue, U.S. deficits could widen at the margin, and that can be USD negative. That could help Asian currencies. You can see right now the Japanese yen gaining a little bit of ground. This is Bloomberg.
We've been in contact with our foreign trading partners, and they like the tariff deals. So, they're not going to be changed. And the president remains undeterred in his determination to lower our trade deficit and bring manufacturing back to the U.S.
U.S. Treasury Secretary Scott Bessent on the U.S. Supreme Court's decision overturning many of President Trump's global tariffs. We also heard from the former U.S. Commerce Secretary Gina Raimondo welcoming the decision striking down those tariffs. Speaking to us shortly after the ruling was released, Raimondo said the president's landmark economic policy has created a lot of uncertainty for businesses.
But I think the really important message of today is that the system of checks and balances in this country worked. And if anything, I think it makes America stronger. If anything, it gives us even more leverage in the world because it shows the world, it shows global businesses, our judiciary is independent, it enforces the laws. And, you know, you asked me in the beginning, what will Trump do? He seems to still want to go ahead with tariffs, but now he's going to have to do it in accordance with the law, which shows the world and our allies our systems are working, the judiciary is working, and we're a stronger country because of that.
Well, when it comes to China, you think about the stance of some of the other nations in the world. Mexico, for example, has already raised tariffs on China. A French government advisory panel just this month proposed tariffs on China, hikes coming from the EU. Do you see any room here for a coordinated move by the West against China when it comes to some of the overcapacity here? And do you think that that's something that you would advocate for?
It is certainly true that in order for the United States to effectively compete with China and their distorted trade practices, we're strongest when we work with our allies. I was in Munich last weekend at the security conference talking to a lot of Europeans. You know, when China subsidizes a particular product and then dumps that product into the global market, it doesn't just hurt America. It doesn't just hurt American workers, consumers, and farmers. It also can hurt Europeans and Mexicans and Canadians. And so it's definitely the case that we would be stronger working with our allies to combat the unfair, in many cases unlawful practices of the Chinese government.
And Gina, I also want to ask about what we're seeing on the domestic front when it comes to some of these multitude of companies that have filed suits against the government, basically trying to secure a refund for these tariffs. As of December, rather, you are a board member of Costco. And I'm curious, you know, when you think about the process ahead of us, what is the kind of timeline that you're thinking about? Certainly we saw from Justice Brett Kavanaugh today saying that this is going to be a very messy process. Is that your expectation as well?
It is. Look, it's hard to know. This came down a few hours ago. But one of my concerns about the whole way that the president has gone about these tariffs, apart from the fact that he overreached his presidential authority, is it's just created so much uncertainty, you know, and today we have more uncertainty.
Former U.S. Commerce Secretary Gina Raimondo speaking with Bloomberg's Katie Grayfield. Let's take a look at how U.S. assets are faring. We already saw them slipping in the early parts of the session. Those futures are still coming under pressure, whether you're looking at S&P or the NASDAQ 100 futures, as is the dollar index that is extending those declines that we already saw on Friday. We are seeing Treasury futures looking pretty flat. Some key concerns about what this is going to mean for the trade deficit or the revenues that were expected to have come in for the U.S. Let's get more with our next guest. Louise Loo is head of Asia Economics at Oxford Economics. Louise, we are, of course, seeing the Supreme Court striking down of this reciprocal tariffs as perhaps a plus. But then with 15%, that just means more tariff uncertainty. What are you seeing in terms of the potential net impact for Asia economies?
Hey, good morning, Heidi. Well, I think this is something that has been well signaled. So there is always that possibility that tariffs would be struck down. To a certain extent, we were actually hoping that tariffs won't be struck down such that there won't be this uncertainty of what might replace the current tariffs. We know that these tariffs will broadly stay in place, whether or not it is in the current form or in other constitutional form. So for Asian exporters, I think much of that has been rerouted, much of them supply chains have actually adapted. So the actual net impact might actually be, quite neutral. Having said that, much of Asia's growth comes this year from the fact that U.S. consumers are going to be quite resilient. Now, that resilience is obviously being called into question now, given that not just on the trade side, but the fiscal support that these tariffs were supposed to give are going to go away. So that's putting into question how much the U.S. consumer is going to spend this year. That would impact our Asian economies out here.
So What is that also going to mean for China's trade policy and the impact on the economy overall then?
Well, I think for China, we haven't really heard much of the U.S.-China direct trade tensions for a while now. A lot of our tariff news are coming into place. This year, we're expecting, if you look at the resilience of Chinese economy last year, the export resilience is actually quite secular to tariffs. A lot of the products that we saw strength in are also products where Chinese have got very strong price competitive advantages in. Now, that doesn't get eroded by, tariffs going up by 15-20%. What that means, however, that the tariff differential of many Asian economies with China might actually narrow. So, for instance, if you think about Singapore, Australia, those are economies that actually might get the losing end of the stick with this new 15%. So that could help Chinese trade marginally. But again, we're thinking about marginal improvements here. Of course, there is the April visit from the U.S. administration into China that could also spell further toying in tensions between both sides that could be supportive for Chinese trade as well.
Will then be also the fundamental drivers still leading China's economy in Asia? I mean, we do have the loan prime rates from commercial banks in China this week. And of course, not to mention Baidu earnings as well, the whole theme around artificial intelligence.
Yeah, I think so. Well, I think, if you look at the past few decades, Chinese growth has been a very good predictor of regional growth. That has decoupled a little bit since, I would say, 2015, 2016. So Asian economies, by and large, have really tried to stand on its own, so to speak, to put it very bluntly, on domestic demand, on their own exports. So I would say that, a resilient China this year, or rather in our base case, a mother-true China this year, as a result of some of the breakthroughs that we see on the technology side, or some of the more supportive financing environment offshore, that could support regional economies. But again, this is quite incremental. We're expecting that regional economies would also be more supportive fiscally on their own, and that should also lend some tailwinds to regional consumers, regional businesses as well.
And we're getting the latest lines from South Korea's industry minister Kim Jong-un in a meeting saying that the country will continue friendly consultations with the U.S. on tariffs. Of course, South Korea is a country that has been threatened again with 25% tariffs because that trade deal, according to President Trump, is not moving fast enough when it comes to solely implementing those agreements. Countries that are heavily dependent on trade, like South Korea, like other markets, Japan as well, Taiwan, are they more vulnerable in 2026 if these tariffs, although stricken down by the Supreme Court, it could mean more uncertainty in terms of what tariff regimes are implemented, for how long? It'll just be a myriad of questions from now.
Yeah, and I think for these economies, the question is broader. It's also the fact that with these tariffs that are being struck down, it's actually, if you recall, as you probably mentioned earlier on, there are these quid pro quo investment deals on the back of that, right? That President Trump has been hammering onto Korean officials for. The fact that the tariffs were struck down, then the question is, are these investment deals going to hold, right? The fact that Koreans are pledging hundreds of billions of dollars into the U.S. And for these economies that are heavily trade dependent on the U.S. specifically, especially on U.S. technology demand, then that, has a very significant bearing on currencies, which is what we've seen last year as well. The Korean won hasn't quite stabilized in recent months, but it hasn't quite gone back to the levels that it was before. And I think that's one of the conundrums that policymakers are grappling with. Do they try to diversify their supply chains, in which case they can't do that immediately anyway, or do they try to support the currencies in other ways, such as, through some of these intervention measures that we saw last year? And so I think in the coming week, Bank of Korea is going to meet this week. We're expecting that the policy rate will stay on hold, despite the fact that the environment is more uncertain, despite the fact that the economy could do with a more dovish cut. We think that that's not going to work just because of what's happening on the currency side.
Perhaps more mindful of potential currency depreciation. Louise, I'm glad you raised the issue of the exports from some of these economies to the U.S. in terms of technology, for example. I wonder, when it comes to the chip exports that have been supporting these economies, for example, to what extent is that agnostic of any tariff uncertainty that we might be continuing to see in the next couple of months?
Well, it's a little bit hard to say because I think these chip tariffs are benefiting from very secular AI-related demand, as everybody knows, but it's also benefiting from some of the exemptions to these tariffs last year. So if they continue to receive exemptions, not just on chips, but also down the supply chain on things like electronics, then that should be supportive of these exporters. But having said that, I think a lot of the demand has been pushed forward from last year, such that this year, in terms of incremental demand, it should have been smaller than last year. And that means that the impact, the growth support that delivers to the economy should be smaller. We think about the Korean chip makers, that's coming under more pressure this year because of the space that it is in the tech stack. The Taiwanese chip makers, not so much because of the logic chip components that is specialized in. So there are different pockets of emerging vulnerability, I would say. But so far, and that I think could play out towards the end of this year. I say towards the end of this year, mainly because if you look at the inventory levels of some of these chip makers, of the economy as a whole, they do seem to be at quite healthy levels still. So there is no sign that there should be a significant inventory correction, or if there is a turn in market demand, that these should lead to any significant collapse that would really red flag the economy. So I think in the near term, and in the near term I'm talking about in the next 1 or 2 quarters, these demands should stay fairly buoyant.
Louise Loo, good to have you with us, Head of Asia Economics at Oxford Economics. And here are some of the other top global headlines that we're following. The New York Times says President Trump is leaning toward an initial strike on Iran in coming days, followed by a larger attack if Tehran refuses to give up its nuclear program. The report cites unnamed sources saying that Trump has not ruled out a military assault later this year intended to help topple Ayatollah Ali Khamenei. The U.S. and Iran are set to resume talks on Thursday in Geneva. Brazil and India have sealed a framework pact on critical minerals during President Lula da Silva's visit to New Delhi. The deal allows the countries to work closely on processing in a move aimed at securing rare earth supplies at a time of global disruption. Brazil also offers India a potential alternative source of supply as it seeks to reduce reliance on China. More than 35 million people across New York City and the U.S. Northeast are under blizzard warnings as a huge winter storm brings heavy snow and howling winds. New York Mayor Zoran Mamdani has closed streets, highways, and bridges to most traffic from 9 p.m. Sunday night through noon on Monday Eastern Time. Public schools are also closed as up to 24 inches of snow could fall, accompanied by high winds and coastal flooding. And of course, a reminder of our new online feature, the Bloomberg Video Hub. Subscribers can explore live streaming, news and interviews, all our Bloomberg TV shows, documentaries, reporter analyses, and much more. Check it out, bloomberg.com/videos. This is Bloomberg.
Let's take another look at commodity prices. Oil has been reversing some of those gains from the past week as we watch for developments between the U.S. and Iran on a day where gold prices are extending those gains with the tariff uncertainty and that backdrop. All this also against the backdrop of the slide in the dollar. Let's bring in Bloomberg's Stephen Stepczynski, who leads our Asia energy coverage. So, Stephen, let's maybe start with oil prices first, because even though we're seeing a reversal, is it the view that the uptrend is still intact, given how Iran strikes could still happen. I mean, what sort of upside protection are traders looking for at the
I think when you look at where oil prices have gone over the last few weeks, it's clear that they've been hedging their bets, that there is a chance that the Trump administration could do something. There could be a strike. I mean, clearly the military buildup in the Middle East, the largest in over 2 decades, does suggest that something could happen. And with that, I think the oil traders are preparing for a worst-case scenario. Now, I do want to remind us that we are at about $70 Brent. Compared to if we were a few years ago, if this were happening, we'd be well over $100. So the risk premium is being built into it. What's interesting about the oil market is there's the risk premium versus just the physical situation on the ground, which is the market is entering into a period of a glut. So with this happening, you are likely going to see a continued rise of prices, maybe some more volatility up until the end of the week when we do have the next round of talks between the U.S. and Iranian officials. That being said, the fact that the talks are on the books, that's good news in sort of deflating prices. You are seeing prices sort of fall right now. I think it's really going to be difficult for the prices to get to the next level, which is $75 to $80 level for Brent, if there isn't actually some sort of more threats of attack or actually some sort of attack on Iran or other disruptions within the oil market.
Is there also a read-through from the tariff uncertainty and the way it might impact the global economy?
Absolutely. I mean, when you did see all this, the craziness with the tariffs last year, in February when Trump announced all those unilateral tariffs, you saw oil prices fall because there was worries about an economic disruption. Now, that has been taken away, but he's brought in a new thing, which is the 10% tariff, then turned to 15% in the matter of just a day. That uncertainty, again, what is Trump going to do? Is he going to try to hit countries? Are trade deals that have been signed going to fall apart? All of that economic uncertainty could hit different countries, and if that hits countries, that reduces their oil demand. If it reduces their oil demand, it reduces prices.
Yeah, I mean, we were also watching I think on Friday it was the Indonesians said they would perhaps import a bit less from other Southeast Asian countries because they're going to be taking more from the U.S. But to your point about how there are so many unknowns, what is the net effect that you're seeing on gold? I mean, is there even more upside from here?
Well, I mean, gold's a totally different monster, right? So you look at the gold price, and clearly that is what is the safest bet you can make in a period where there is so much uncertainty. Never before have we been in a situation where the president has been lambasting the Supreme Court in such a way. Never has before has he tried to find other levers to pull. So when there's this uncertainty, when you're not sure how this is going to affect stocks, bonds, you're not sure how this is going to affect different parts of the markets, where do you go to? You go to gold. And that's been the playbook for the last year. When Trump does something wild and unexpected, you go to gold. So I think, with this economic uncertainty, with the uncertainty surrounding trade deals, there is a bet on gold. There is a bet to a degree on silver. But I think when you look at all of this together, though, the markets have run hot. You did see that real large decrease in prices over it was 2 or 3 weeks ago now. So how sustainable, again, is a gold rally should be something that the market is likely also going to be watching, because it is going to be choppy going forward there as well.
And of course, with all of the uncertainty, U.S. assets continue to be pressured. And this idea that the U.S. dollar could weaken from here because it's receiving more scrutiny, right? How is that playing into the commodity space? Because gold is rallying, oil, obviously, with the geopolitical premium as well.
A lot of products are bought in dollars. So the very simplest way to say it is, if the dollar gets cheaper, you have more buying power. I'm sitting in Singapore right now, where you could argue that the Singapore dollar is becoming a bit of a haven. The dollar here is becoming stronger. So that increases the buying power of governments. If they're buying commodities, oil, gas, anything, that allows them to buy more of it. So there is a sort of a bullish read-through when you look at the weaker dollar. But, there are all these different elements that you have to think of. And there are much smarter traders playing them than I can explain. But clearly, it's not just the dollar here. It's also the economic uncertainty. It's also what are other trade partners going to do. And then on top of all that, it's geopolitical uncertainty with what's happening with Iran, what's happening with Cuba and Russia oil trade. We didn't even touch on that. What's happening with Venezuela, Russia, Ukraine. So there are a lot of different things to play. And it's going to be very challenging. It'll be very interesting to see how the traders choose.
Stephen, thank you for helping us make sense of some of this. Bloomberg's Stephen Stepczynski, who leads our Asia energy coverage. More ahead on the Asia trade. This is Bloomberg. Some other headlines we're tracking. The U.S. Justice Department investigation of Netflix's $72 billion offer for Warner Brothers is said to include scrutiny over the streaming giant's business practices. Sources say officials are looking into whether the deal may create a potential monopoly. It's the strongest signal yet that the Trump administration is going beyond a standard review. Any possible delay may benefit Paramount's rival bid. Bloomberg has learned OpenAI expects sales to top $280 billion by the end of the decade. The forecast reflects the AI developer's strong momentum in subscription sales to consumers and businesses. OpenAI also recently began testing advertising to some users as a new source of revenue generation. CFO Sarah Fryer recently said the firm's annualized revenue last year topped $20 billion. Shery?
Yeah, take a look at how we're setting up for the market opens in Korea. Japan away on holidays. Later, mainland China remains on holidays. But we're looking at South Korea and other Asian futures after the Supreme Court decision reduced really the worst case trade fears. And we saw futures just jumping, as you can see on that terminal chart. Bloomberg Economics assumes that a 15% flat levy still takes effect if it still takes effect on February 24, which will be Tuesday. Would take the effective tariff rate to around 12%. The ASX 200 early in the Asian session has reversed those early gains, is now losing ground. U.S. futures also down 0.3%. And some specific sectors to watch out in South Korea involve the likes of apparel makers, for example, that supply to U.S. brands like Lululemon and Nike. So do watch out for those different names in the Korean Open. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens and the first reaction to the U.S. Supreme Court striking down President Trump's reciprocal tariffs, although Avril President Trump also still threatening 15% tariffs. And let's not forget, it's still NVIDIA earnings week as well.
Yeah, and given all the uncertainty, it looks like traders are expressing their concerns by selling the dollar. So on top of what we might see in stocks in Asia today, also tracking the moves in FX.
Yeah, the U.S. dollar, very interesting because Saxo Markets is now saying that if that revenue is lost from those import tariffs into the U.S., that could actually worsen the U.S. deficit, and that could actually be USD negative, which also could contribute to more upside to Asian currencies, not to mention Asian equities as well because of those flows. We have Japan away on holidays today. Later, China is still away on holidays as well, but South Korea is opening at the moment. And already we're getting the first 20 days of this month, the export data rising 23.5% year on year. When it comes to the import numbers for the first 20 days of this month is also gains of 11.7% year on year. So you can really tell, especially in these export numbers, how important the trade situation is for South Korea, especially when it comes to tech exports, semiconductors, which is why we'll be watching that sector at the market trading session today. Already we heard from the industry minister that South Korea continues to hold friendly negotiations with the U.S. and that nothing will change when it comes to the U.S.-Korea trade deal. We can see right now the Korean won strengthening a little bit against the U.S. dollar. 14.41 is your level. We're waiting for the South Korea market to start trading, but you have seen the Kospi already at record highs and that optimism when it comes to the Korean equity space. space. The Bank of Korea is also holding its rate decision this week. The expectation is for a hold at that rate of 2.5%, given, of course, the situation in South Korea, where the economy might be recovering, but also there are concerns about the financial situation with household debt pretty high. And you can see the pop early at the open of 2%. Also, take a look at Nikkei futures because, as I said, the Japanese market is away on holidays, but the yen continues to trade at around that 155 level against the U.S. dollar. A little bit of strength as the equity markets remain closed, but you can see not much movement right there, Avril.
Yeah, equity markets remain closed. So we are seeing, in terms of Treasury futures, we are tracking that reaction. It's interesting to see that move sideways on Treasury futures. We are seeing U.S. stock futures, though, pointing to downside at the open. So this would represent a sort of reversal from the Friday bounce that we saw on Wall Street. And this is, of course, to your point, coming in a week where we are expecting NVIDIA earnings. And of course, even though that valuation has pulled back a little for the mega cap stock and, it hasn't hit any records since October, there is a sense that even with a good set of numbers, any upside in NVIDIA might be pretty limited. Something else to watch for this week on a day where Brent is erasing some of last week's gains. We are seeing that expression of the U.S. tariff uncertainty concerns via the dollar. So you talked about the gains that we're seeing in the Japanese yen today. Look at how the euro is also gaining against the greenback at a time where European leaders say, they might stall the ratification of any trade deal. Despite this, we heard from the U.S. trade representative telling these trading partners to honor those trade deals. Have a listen.
These deals are going to be good deals. We expect to stand by them. We expect our partners to stand by them. And I haven't heard anyone yet come to me and say the deal's off. They want to see how this plays.
Let's discuss all of the latest tariff news and the impact on the markets with Kyle Rodda, senior market analyst at Capital.com. Kyle, always good to have you with us. I mean, we're still trying to decipher what these new tariff threats could mean, right? Especially how long they will last. Right now, Bloomberg Economics saying that it could take the effective tariff rate on average to around 12%. The uncertainty, though, really the skepticism about U.S. policy, what does that mean for markets?
Ultimately, as you just noted, it means more uncertainty. That's going to be discounted into US assets in particular. And there's just this continued confusion over, obviously, trade policy, but also as a result, fiscal policy too. And more than just a risk premium to sort of reflect that uncertainty, it makes it very difficult for markets to predict things like, tariff revenues, future deficits, therefore the, appropriate price for safe haven assets like treasuries, and then by extension too, the US dollar and equities as well. Obviously, equities are going to sort of enjoy the short-term boost potentially that could come from, basically what is the removal of a consumption tax on the US economy and the kind of, sugar hit that could obviously create. But, obviously what we've seen over the last weekend is the second and, potentially third order impacts of this now where, fresh tariffs have been hiked, trade deals are being sort of thrown into doubt. And once again, this decision, rather than removing uncertainty, has actually increased it. So basically, those trades that have benefited from those dynamics, which have been around for a little while now, will probably continue to prevail, while the ones that have been a detrimental impact for, like treasuries and the US dollar, that's weakness in those assets. That's likely to continue as well.
Does that weakness also mean relative strength for Asia, whether it's currencies or equity markets, given the financial and capital flows?
Yeah, this will be the interesting question because, on the one hand, we're likely to see long-term rates sort of re-anchor a little bit higher, again, because it could mean, more uncertainty, higher risk premium, and also questions about, funding pressures in the United States going forward and higher yields. But the dollar is likely to sell off, on a sustained basis for as long as this policy uncertainty continues. At the margins, that should mean, sort of diminished pressures on financial conditions and should be fairly favourable for the overall region. My sense is that overall this will be probably negative for the Asian region because it will raise questions about trade policy going forward and trade flows, therefore global economic growth and therefore the growth outlook for obviously a very growth sensitive and cyclical sensitive region in Asia. So I would suspect the benefits to financial conditions potentially will be offset by, again, those fears about that uncertainty and fears about growth going forward, which is all basically to say that, obviously when you do get such significant uncertainty dominating the markets in the United States, it's really going to bleed across the rest of the world and be a global macro headwind too. And so I would suspect that the correlation between US assets and Asian assets will be, reasonably positive and as a result, actually quite negative for the region.
Does that include for the AI trade in Asia, Kyle?
I think the AI trade is something that is largely independent of this. Obviously, at the margins, tariffs are going to impact, the import costs related to some particular goods going in multi directions. But the AI story is something, obviously, over the last sort of 24 hours or so, we've lost focus on. But it's, really about return on investment, capex spending, and really AI monetization. And the problem that we have here at the moment is effectively a situation that spending is becoming a really big concern. Multiples are compressing because of that. And just like in the United States, where we're likely to see stock prices readjust for that, that's likely to happen in Asia as well, notwithstanding continued disruption that might see, out of left field, for example, a little bit of a tail risk, if you will, a model that breaks through that, obviously suggests that the gap in the AI arms race, if you will, between the US and perhaps some of the Asian competitors could be bridged. So once more, trade uncertainty, not good for anything whatsoever. Specifically AI, still seeing valuation compression in the United States just as much as in Asia as well. And I would expect, again, that correlation to persist because it is something that is, if you do look at the tech index in Hong Kong, the Hang Seng on an aggregate as well, it hasn't performed, well, it's basically performed in line with the NASDAQ and that kind of struggle for that index in particular to sort of pick itself up this year.
Kyle, it's also been interesting. I mean, you talk about AI, right? Some of these markets in the US, you look to a certain extent in Asia, they've been part of this AI so-called scare trade. But China, to some extent, I mean, when the markets have been open in the past week at least, have been a bit insulated from that. Is that something that you see continuing?
Possibly. I mean, this becomes a matter of the industry in Asia or the industry in China being able to continue to keep up with the innovation that we've up until this point seen in the United States, and then obviously, compete in those markets. But then also because one thing about the AI trade is that it's, just as much has strategic implications just as much as it does commercial implications, is that we're, seeing that kind of multipolarity emerging, not just like we are in politics, but also in industry and in tech itself as well. The question becomes, to what extent are AI giants in China able to reproduce the successful products that their US counterparts are to be able to deliver them into the Chinese market, to be able to deliver the growth and productive benefits, not just for the industry, but the economy more broadly, and how will that benefit earnings going forward. And really that remains something tied back to that narrative we've spoken about with tech disruption is, continued innovation and breakthroughs within the industry to sort of drive that forward. So that's a very difficult thing to quantify. What I would say, though, is if you're looking at risk and reward, the valuations on the Chinese side of the ledger look a little bit more attractive because they became less inflated. And therefore, if you had a bit of a pairs trade there, if you will, you'd expect maybe a bit more outperformance in those Chinese AI names compared to those US AI names that were very elevated and richly valued.
Kyle Rodda, really good to have you with us, senior market analyst at Capital.com. And these are some of the movers that we're watching in the Korean session. We, of course, have the latest trade news out of the U.S. with President Trump threatening those 15% tariffs already. So do watch out for those Asian apparel makers, such as Paeksan Hwasong in South Korea, for example. Some of these companies supply to U.S. brands like Lululemon and Nike as well. We had that upside in U.S. equity markets as well on the fact that the Supreme Court struck down President Trump's tariffs. And we're seeing a little bit of more that risk-on sentiment and relief rally in the Asian session as well. When it comes to Hyundai Motor, we heard from Chosun-ilbo, for example, that the group will be spending 10 trillion wons on artificial intelligence, on robots as well. So we do have idiosyncratic news in today's session as well. This is Bloomberg.
tomorrow. As affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
One of my concerns about the whole way that the president has gone about these tariffs, apart from the fact that he overreached his presidential authority, is it's just created so much uncertainty, and today we have more uncertainty. Will there be refunds? How will that work? When will that happen? Will the 122 tariffs that he put in place today, it just creates a lot of uncertainty.
Former U.S. Commerce Secretary Gina Raimondo speaking to us after the Supreme Court decision striking down many of President Trump's tariffs. Now, the U.S. president says he'll impose a 15% baseline tariff on all global trading partners after that bombshell court ruling. While his administration is telling partners to honor bilateral trade agreements, the EU is warning it may freeze ratification of its deal, while sources say Indian officials are postponing talks to finalize its pact with the U.S. Where does this leave China? Joining us now from Washington is U.S.-China Business Council President Stein. He previously served for nearly 3 decades as a U.S. diplomat, including at Consul General in Shanghai. Sean, really good to see you. So we are wondering how China might respond to all this. Of course, they've been on a long holiday, so no immediate reaction just yet. But what is your sense of how China might approach this?
Yeah, that's a great question. Thank you, Avril. I think the most important thing is that for China, this is really a bit of a win. And that's because under the rubric that the president has set to replace his IEEPA tariffs, it's potentially a 10% or a 15% global surcharge. So overall, what that means is it means that once those go into effect, then the overall tariff rate for most Chinese goods is lower than it was before. And so unlike with the EU, where it creates a lot of uncertainty, in the case of China, it means that the terms are now much more favorable to China than they were just before. And remember, if you think about the magnitude of this, if the surcharge is 10% compared to where it was before, that's potentially $100 billion $100 million for every $1 billion of trade that's affected. So the cost reduction is really substantially lower. So it's a win for China.
Will they see it as a win, given that also it causes a lot of uncertainty? I mean, just trying to decipher whether this is a 10% tariff or a 15% tariff. How does this compare with fentanyl tariffs, most favored nations, and other countries as well?
Okay, that's a great question. So unlike most countries, the tariff situation on China before the Supreme Court ruling was really pretty complex. They had the baseline MFN rate, which was a few percent. They had the Section 301 tariff rates from Trump 1.0 and from the Biden administration, which were about 25%. Then on top of that, they had 10% fentanyl tariffs and now 10% tariffs for reciprocal tariffs. So the part that's in play because of the Supreme Court's ruling are just those last two, the fentanyl tariffs and the reciprocal tariffs. So those today have fallen to zero, but when they go into effect with the new surcharge under Section 122, whether it's 10% or 15%, that's still going to be a substantial reduction from where they were before. So the MFN rate won't change, the 301 rates won't change, but the other tariffs will be lower once those go into effect under either scenario, 10% or 15%. So yeah, China will see that as a win.
And to your point, I suppose, is also the idea that the Supreme Court striking down these tariffs also means there's less leverage for the U.S. president. I mean, what does that mean for the contours of the gathering between the two leaders late March into early April?
That is such an important question. I'm glad you asked that. And so leverage in a negotiation only really matters if one side has got more leverage than the other side. If both sides have leverage, the effect is much more ambiguous, or it tends to cancel the other side out. So where we've been is that you may remember that after Liberation Day last year, when the U.S. raised tariffs unilaterally on China, China responded tariff for tariff. They went toe-to-toe with the United States, and that's how we got into this escalatory spiral of, of triple-digit tariffs, which didn't serve either country's interest. And then you may remember that, despite the posturing, the U.S. blinked first and asked China to go meet them in Geneva so they could reduce those. So ever since Geneva, tariffs have really lost most of their edge as leverage for the United States. And so if you look at that as the first truce in the U.S.-China trade war of 2025 or of Trump 2.0, tariffs, then that was a front on that war that was fought to a standstill. And then the trade war moved to other areas, things like export controls and sanctions. And this is a case where also both sides have demonstrated they've got potentially significant leverage over the other, and they've largely fought to a standstill. Most notably, China has played the rare earths card, which not only hurt industry in the United States, but also around the world. And so this is a case where the U.S. absolutely has leverage, but the Chinese have counter leverage. So what that sets us up for is a meeting in Beijing in maybe less than 40 days, where the two presidents are not going to be able to use that leverage. And that means, ideally, this will be a situation where both sides have to focus on what would be a win for both countries. And as you've implied previously, what would be the biggest win for both countries is to bring some predictability to the business and investment climate so companies know how to invest and they know how to plan. Where we've been for the last year has been the constant instability and unpredictability has meant that investment decisions have gone unmade. It's meant the U.S. has lost manufacturing jobs every month since Liberation Day. So this potentially will bring a chance to bring some much-needed stability into this relationship. That'll be the biggest outcome.
The Trump administration has not necessarily even said who he's taking from the business community to China. So how well is the administration preparing for that state visit into Beijing? And what would your members like to see being achieved in order to bring some more certainty to the relationship?
Yeah, this has been shocking. I was just in Beijing before the holiday. And meeting after meeting after meeting, what bled into all of those from Chinese officials was a mix of somewhere between being irritated and being apoplectic at the U.S. not preparing for this visit. Normally, when you've got a presidential visit, planning starts months in advance. By now, the two sides should be having regular calls. They should have exchanged lists of deliverables. They should have planned out the actual physical mechanics of the visit. But none of that has happened. And so it just shows that on the U.S. side hasn't done its homework yet to decide what it wants out of this trip. And the longer they wait, the harder it then becomes to deliver real deliverables that could help U.S. competitiveness or the U.S. economy. But you also hit at one other thing that I think is really important. And that is, if we look at the president's other trips, he's always taken CEOs with him because business is what's on his mind. And that's what he's been focused on. That's especially true with China. But even now, as of Friday, they haven't decided if they want CEOs to go on this trip, much less started to extend invitations. So for a trip that's less than 40 days away, we don't have a single CEO that knows if he or she is going to be invited. But that just is, I think, sort of emblematic of the administration not having really done its homework on this visit yet. If I can add just one more thing that I think is really important to frame this visit, and that is, China is a country that takes protocol extraordinarily seriously, much more than most countries that I've dealt with around the world. And I think in this case, it's important because the Chinese recognize 3 levels of state-level visit or of leader-level visits. And so you've got working-level visits where a state leader will come and have official meetings. They have official visits which are much larger with more protocol. This is, for example, like Keir Starmer's visit from the UK just a few weeks ago. That was an official visit. But Trump's visit, both sides have announced it's a state visit. And that takes everything up to 11. It takes everything up much higher on the protocol front. And so, as part of that, there's the state dinner in the Great Hall of the People that could involve hundreds of people. And if President Trump shows up with a delegation of 5, then that just doesn't work out protocol-wise. And you can understand why.
Sean, you raised a good point about how the state-level meeting is going to also perhaps raise the stakes. I mean, could you talk a bit more also about the extent in which there will be clarity for businesses as they have to adjust, in the meantime, their investment, their hiring decisions as well.
Yeah, so that's what everyone's hoping for, right? What does the U.S. want out of the trip? The U.S. wants some access to markets. It wants to sell aviation. It wants to sell airplanes. It wants to sell agriculture and maybe some other things. And what American business is pressing the administration to do is what it hasn't yet done. And that's to talk about the long-standing market access issues, the long-standing non-tariff barriers that discriminate against American products, American exports, and American business in China. And so that's what American business is looking for. And then what American business is looking for and what the Chinese are looking for, again, is a stable and predictable business climate so companies can plan. So if we're talking about what the level of tariffs will be coming into the United States, you know, the administration wants to emphasize manufacturing in the U.S. But remember, what does the U.S. import from China? It imports final goods like, say, television sets, but it also imports a huge number of intermediate goods, things that go into American manufacturing and power American factories. Until we know in the long term what that's going to cost, how do you build a new factory and how do you price that in? So until we get stability, jobs will continue to hemorrhage from the United States because it's just impossible to invest. Meanwhile,
John Stein, we'll have to leave it here, but he's the president at the U.S.-China Business Council. We're really grateful for your time. And of course, the Bloomberg Video Hub is a new feature. Subscribers can go there for the latest streaming news and interviews. This is Bloomberg.
If it shakes the whole equilibrium, which, you know, people in the trade had got used to because they continued trading after the April decisions and the July trade arrangement between the US and Europe. But to sort of shake it up again is going to bring about disruptions in the business, for sure.
Yeah, we're looking at European futures at the moment, trending downwards by 0.3%. The euro, though, seeing a little bit of upside after falling to a one-month low. Of course, we continue to be pressured by the risks around the U.S.-Iran negotiations, but also the EU now saying that they could be delaying ratifying their trade pact with the U.S. More ahead. This is Bloomberg.
We've been in contact with our foreign trading partners, and they like the tariff deals. So, you know, they're not going to be changed. And the president remains undeterred in his determination to lower our trade deficit and bring manufacturing back to the U.S.
U.S. Treasury Secretary Scott Bessent on the U.S. Supreme Court's decision overturning many of President Trump's global tariffs, which led to a rally in the Wall Street session with equities higher. We are seeing perhaps a little bit of a relief rally in some markets across Asia, especially around South Korea. You can see the Kospi gaining 1%, and the likes of Samsung, Hyundai Motor leading the charge higher. Hyundai Motor also reacting to some idiosyncratic news about their investments into artificial intelligence and also robots, according to Chosun Ilbo. That will amount to about 10 trillion won. Kia also gaining ground. Nikkei futures at the moment pointing to the downside. Remember, Japan is away on holidays together with China, which remains on holidays, so still thin trading across the board. But investors very much watching how U.S. trading partners navigate this fresh tariff uncertainty. Japan's ruling LDP party tax chief Itsunori Onodera describing the U.S. tariff situation as, quote, messy. Meanwhile, South Korea saying that the U.S. Supreme Court will not derail its broader trade agreement with Washington. Let's bring in stocks reporter Momoka Yokoyama in Tokyo, and also in Seoul, we have our Korea economy and government reporter Hee-Soo Lee. Momoka, let me start with you. What was the reaction here in Japan? Although we're away on holidays, we have heard some comments about the tariffs.
Yes, absolutely. So one of the senior member of LDP, Itsunori Onodera, mentioned that the changes in tariff policy is, quote, a real mess. And he didn't quite comment on the possibility of renegotiating the tariff, mentioning that their focus always has been the sector-based tariff, which is automobile tariffs. And this time around, the auto tariffs are actually not under the scheme, which is affected by this Supreme Court ruling. So Onoda sort of mentioned that he would want to avoid a situation where renegotiation would lead to changes or impacts on the ongoing automotive tariffs. And if you look at the market today, as you mentioned, Shery, the Japan market is closed, but the yen, it seems it's rising mostly on the broader weakening of the dollar. But analysts are mentioning if the U.S. continues to do this quick changes in tariff policy, it could sort of affect the attractiveness of the dollar, and which would, of course, result in strength in Japanese yen. And the Nikkei future is pointing sort of a down today, mostly likely be due to strengthening of the yen, which could negatively impact the share price of the exporters. And at the same time, it will be quite interesting to see tomorrow when the market opens to see what kind of impact the investor would see in the market.
Hisu, let's bring you in here. I mean, as we watch for the reaction from South Korea, we already have some in them saying that, the deal is intact. But I suppose similar to Japan, these sectoral tariffs are not affected by the Supreme Court decision. What more do we know?
So basically at first glance, the ruling looks positive for Korea because basically the Supreme Court struck down the legal basis for the reciprocal tariffs. But in reality, the relief is limited. President Trump has already announced that he's going to raise the global tariffs to 15%. So while the original 15% tariff agreed under the U.S.-Korea trade deal that was signed last year has now been voided, a 15% tariff is still being applied just through another route. And also tariffs on autos and steel are still valid. So the ruling doesn't necessarily mean lower tariffs. It means the legal route has changed, and that just adds another layer of uncertainty rather than clarity.
And Hisu, at a time when President Trump hasn't been too happy with specifically South Korea's implementation timeline of their deal, right? So what should we be watching ahead for when it comes to the South Korean, situation around trade, but also the economy, because we have a BOK decision also this week?
Yeah, right. So the broader rate is only one part of the equation. What really matters for Korea is the sectoral tariffs, right? Autos and steel are already under separate frameworks, and those remain in place. And especially for cars, they're main exports to the U.S., so it's very critical. And we also have to note that there are also other sensitive sectors, such as semiconductors and pharmaceuticals, where additional trade measures have been discussed in Washington and can come at any time. So the situation is more complex than just a single number, 15%. So that's why the Korean government said it's going to closely monitor and track the development while ensuring that the existing deal with the U.S. is being carried out.
Momoka, what about the pace of some of these investments from Japan to the U.S., which Trump just outlined not so long ago?
Exactly. So this kind of new set of uncertainty comes at a quite interesting time for Japan, right after U.S. and Japan agreed on the investment program, which of course had a quite positive impact on the stocks market. And at the same time, the Takaichi is set to visit the U.S. next month. So the progress of that impact on that framework will be quite closely watched by lawmakers, but also by investors as well.
Thank you to you both for running us through the reaction and what to watch next, both from Japan and South Korea. Bloomberg stocks reporter Momoka Yokoyama and our Korea economy and government reporter Hisu Lee. Now let's take a look at how emerging market assets are faring as the dollar comes under pressure this Monday morning. We are seeing the MSCI Emerging Markets Index adding just a touch It's quite interesting because we are also seeing, I suppose, a bit of that haven demand for some of the currencies beyond the dollar. More ahead on the Asia trade. This is Bloomberg. Now we are watching some of the stock market movers in the APAC region as well on a day where oil prices have pulled back slightly as we watch for what comes out of that US-Iran meeting later in the week in Geneva at the time where reports suggest that a targeted strike by Iran or by the US on Iran is still on the cards. Today you're seeing some of those declines in the energy-related names. The New York Times reporting that President Trump is leaning toward an initial strike on Iran in the coming days, followed by a larger attack if Tehran refuses to give up its nuclear program. And this comes with diplomatic talks due to resume on Thursday. For more, let's bring in our Washington Deputy Bureau Chief, Laura Davison. Laura, we have been seeing both markets and I suppose the rhetoric evolving on the Iran side of things from the U.S. approach towards Iran, both whether you're talking about the potential for strikes or otherwise. What are we seeing in terms of what we can expect from the talks on Thursday and the realistic expectation of whether we're going to see military action soon?
Yeah, the key question going into Thursday's talks is this question of whether Iran can or cannot continue enriching uranium. We're having, Steve Witkoff, the U.S. envoy, who said that, that the U.S.'s firm line is that Iran needs to agree to no enrichment, where you have Iranian officials saying that the U.S. has said that they will allow some enrichment to continue. So the two sides really aren't on the same page there. It's important to note that, last week was when Trump said that Iran has 10 to 15 days to make a deal. We've had 6 or 7 days elapse since then. So at least from Trump's self-imposed deadline here, getting closer to some sort of decision on whether or not there will be some sort of strike. Trump is continuing to amass U.S. military assets in the region, has really built up quite a lot of firepower there. The question is, will he actually go ahead and pull the trigger both literally and figuratively here? This is something he's been talking a lot with his aides. The New York Times reported he's kind of considering sequencing these potential attacks here, doing some small limited strike on nuclear sites or military sites, and if that doesn't work, then looking at some larger bombardment, potentially looking at toppling the Iranian regime. The issue for Trump here is that this is far from a certain bet. The assurances he got before going into Venezuela, capturing Maduro, he has not been able to get those same assurances from military leaders, according to the New York Times, and that's really caused a lot of the consternation about, will he, won't he on this.
Yeah, I was going to ask, how much on the same page is the Trump administration with itself? Because we continue to hear the different rhetoric from different sides, whether it's the likes of Secretary Rubio or even President Trump himself sort of signaling that perhaps it's more open to a limited nuclear deal. What's the feeling right now within D.C.?
There are lots of different factions within the Trump administration. Of course, it's at the end of the day, it's going to be Trump's call here. But you have, even his own vice president, J.D. Vance, who is much more skeptical about any sort of, foreign intervention here. Vance was reportedly against the Venezuela attacks going into that. Of course, that one ended up being successful. So you have Trump and others looking, back, just 6-8 weeks ago about, having a successful military operation. But there's a lot of concern, within these different pockets here about what exactly the strategy is and what the long game is, after just if there's one attack, then what happens after that.
Laura Davison, Bloomberg's Washington Deputy Bureau Chief. Really good to get your perspective. And we're watching the price of oil. Of course, that geopolitical risk premium seems to be being baked in. Again, we are now hearing from Goldman Sachs that they're raising their 2026 fourth quarter Brent oil forecast $6 to $60 per barrel. Oil is trading right now under a little bit of pressure, but still we're around 6-month highs. So it's been a very strong start to a year. In fact, the strongest start to a year since 2022. Of course, we've had supply shocks, sanctions as well. And it's really interesting because we're coming off a time when we thought we were going into a global record glut in the oil markets. Let's get more perspective from Daniel Hynes, Senior Commodity Strategist at ANZ. How much geopolitical risk should we be pricing into the oil price right now?
Yeah, that's obviously a pretty key question, and at the moment I think it's relatively limited. I think the potential for disruptions, sustained disruptions are relatively low, and I think the market's taking it that way. Considering that we had a fairly similar sort of situation with Israel and Iran only last year, and that didn't really end up in any real disruptions there, but. Certainly, I think the concerns about supply and this risk premium have been triggered by this. The lack of this glut really coming through. I think the market coming into 2026, it's still expected to see, a record surplus hit. But as you mentioned, it hasn't really eventuated, at least yet. And I think, these ongoing supply side risks do present, I suppose, an alternative sort of scenario potentially playing out where the markets stay, relatively balanced. And I think, going in with expectations of weak prices due to that record amount of supply hitting the market, they're having to change their tune a little bit, and I think that's playing its part as well in terms of high prices at the moment.
Yeah. So what are you seeing in physical markets, especially when you factor in the potential of incremental barrels coming from Venezuela as well?
Yeah, look, there's nothing too sort of, large, I suppose, or at least signals coming through, strong signals that suggest that demand is picking up. But we are, looking further into 2026 in a bit more of a positive light, considering, the continued outperformance of the US economy and certainly other markets starting to show signs of growth now. So, for me, the outlook for the course of the year looks relatively positive on a demand front, but it's clearly all about supply. And at the moment, I think, the market had, as I said, essentially priced in this huge glut of oil. It doesn't seem to be happening due to a variety of issues around supply, and that's meaning that the likelihood of a slightly more balanced market is certainly increasing, and I think that's going to provide a little bit more upside to prices in the shorter term.
Hey, Daniel, as you alluded to, we haven't really seen the sort of risk premium that, say, was built in when the US and Israel and Iran fracas happened last year. To what extent are these latest tariff developments perhaps also derailing a bit the tariff agenda, trade agenda, and then taking away from the odds potentially that we might actually see war on Iran? And then what does that mean for the geopolitical risk premium maybe coming down a little bit more?
Yeah, you can't look at, I suppose, the issues at the moment in isolation. You do have to consider, I suppose, the broader sort of environment. And it is quite complex and challenging. And I think that's something which is certainly weighing on the Trump administration as well. And we'll go away to, I suppose, dictating how they tackle Iran. Clearly, the US doesn't want to see higher gasoline prices, particularly going into midterm elections later this year. So there'll be, some concern about how they tackle Iran, particularly in relation to its oil industry. But in saying that, they do seem emboldened by recent excursions into other countries. So I think that has to be taken into account. Then across, obviously, the broader sort of macroeconomic backdrop, with those tariffs being in place, I think there's so much uncertainties that, the market has to really account for, quite wide-ranging sort of scenarios. And that's why we're seeing, prices really remain volatile at the moment.
Amid the uncertainty, what seems a bit clearer today is the selling in the US dollar. I wonder what assumptions you're making for the first half of the year on the greenback and how that might affect the outlook for both oil and precious metals.
Yeah, it's certainly going to help. I mean, we expect to see the US dollar depreciate, but at a relatively slow rate, not an excessive sort of sell-off. That will create a bit of a tailwind for the broader commodity markets. But it's more than just, I suppose, the dollar. It's this this general trend away from sort of US assets, which is impacting risk appetite of global investors as well. And certainly, with that economic sort of backdrop improving slightly, I think investors are certainly more amenable to putting capital into risky or cyclical assets like commodity markets. So I think the investor inflows are going to be an important sort of support mechanism for commodity markets.
So I understand ANZ has also recently raised your outlook for gold prices, and who can blame you given all of the geopolitical risk and also the macroeconomic backdrop. But at the same time, given what we've heard from the FOMC on that potential shift towards even potentially hiking rates, do you reposition? Do you rethink your gold strategy?
Oh, look, you do have to take into account these little shifts, but like I've said in the past, there hasn't been one particular sort of significant driver. It's been a culmination of a whole host of sort of issues, and so I think if one sort of tends to ease up a little bit, the others can certainly continue to push gold higher. I think it's a bit like sort of that sort of move away from sort of US assets. I think the investor is looking at gold in that context and seeing a much more comforting sort of place to put a lot of their capital, even if the out or the returns aren't as great as maybe what gold obviously provided last year. And I think that's going to be a comforting sort of factor for the market this year, and why even with a slight change, I suppose, in monetary policy from the US potentially, we still expect to see those higher gold prices come through.
Yeah, and maybe investors are also focusing on the monetary policy in the back half of the year from the Fed. Daniel, great to get perspective from you. Thank you so much. Daniel Hynes, a senior commodities strategist at ANZ. Here are some top global headlines we're following. Brazil and India have sealed a framework pact on critical minerals during President Lula da Silva's visit to New Delhi. The deal allows the countries to work closely on processing in a move aimed at securing rare earth supplies at a time of global disruption. Brazil also offers India a potential alternative source of supply as it seeks to reduce reliance on China. NASA is preparing to remove its massive moon rocket from its launch pad to fix a technical issue, delaying its much-anticipated mission to send a crew of 4 astronauts around the moon. It says engineers have found an interruption in the flow of helium in the rocket. The agency had been targeting a March 6 launch for the Artemis II mission, but now says it won't happen until April at the earliest. More than 35 million people across New York City and the U.S. Northeast are under blizzard warnings as a huge winter storm brings heavy snow and howling winds. New York Mayor Zohran Mamdani has closed streets, highways, bridges to most traffic from 9 p.m. Sunday night through noon on Monday Eastern Time. Public schools are also closed as up to 24 inches of snow may fall, accompanied by high winds and coastal flooding. More ahead on the Asia trade. This is Bloomberg.
I think the Supreme Court just lowered the possibility of a recession by a not insubstantial percentage.
There's one thing that is relatively clear, and that is this is a tax cut. So the tariffs are taxes.
This is near-term drama for short-term players.
Ultimately, this is a positive thing for U.S. growth.
This is opportunity for nervous investors, skeptics, and bears to take some profits.
The president and Republicans in the Congress will press every lever they can.
Bloomberg TV guests reacting to the U.S. Supreme Court ruling striking down some of President Trump's global tariffs. Now we're watching the reopening reaction tomorrow from Japan and China. In the meantime, we have Saxo Market saying that they believe Asian stocks may see a relief rally even after President Trump's fresh tariff threats. They note that the U.S. Supreme Court ruling reduces the likelihood of very high permanent tariffs becoming entrenched in China, and that lowers the worst-case trade scenario and opens the door for a near-term appreciation in assets. On the other side of the coin, Valverde Investment Partners thinks Trump's tariff hike plan will raise the risks for Asian stocks. They note there is now a real possibility that Trump could opt for non-tariff barriers to salvage his agenda, potentially slowing growth across the region. And Global CIO Office taking a longer-term view, they note that Trump's proposal for fresh tariffs reintroduces policy uncertainty and reinforces the perception of erratic decision-making in Washington, and that might accelerate Asia's structural strengths, including stronger domestic growth, more consistent policy frameworks, and deeper regional trade integration. For now, we are also watching out for how Taiwan and Hong Kong markets open as a reaction to all these trade developments in the past couple of days. That's it from the Asia Trade. This is Bloomberg.